I wanted to refer to the newspaper Mint's article today. There is a letter they are quoting saying that in April, RBI wrote to you saying that they found highly irregular credit management practices, serious deficiencies in governance and a poor compliance culture. Now, you know, at that time, the divergence was already over. So what are they referring to?
So this is effectively referring to divergence.
But that got over, no? Y'all.
So the what I think the
annual inspection happened in June or something, and y'all had.
So let me at least clarify this. I have not seen this correspondence. So this is I'm also
reading it
in the press. If there was such a correspondence, it was very likely private correspondence, confidential correspondence between the regulator and the bank's board, if there was such a correspondence.
Okay.
Now the RBI looks at us in terms of when they come for an annual review, and they may have identified differences of opinion with how bank has managed the life cycle of certain of its loans, and then what their view on that subject is. So this correspondence emanates from their the fact that there were differences of opinion in that. So the various nomenclatures that you are reading are all essentially semantics of divergence itself. Divergence is more a commonly used word. So the RBI is essentially referring to the same facts that there have been observations of divergence in the bank's, let's say, loan management. And the bank has already taken several corrective actions in terms of to change that. So we have, naturally changes are happening. So there is one consequence has been also that the CEO succession had to be carried through. We are also making changes at the board such that these are corrective, strengthening outcomes that the bank is taking. We are also making changes in how we are managing the life cycle of our loans. So divergence has been, let's say, not a credit issue. Okay. So it has not been a risk management outcome issue. You see our numbers.
No, it's a compliance culture issue, which perhaps...
It's more or less a compliance issue, which again is not necessarily, I would say, I would want to take some benefit of doubt of the fact that it was a difference of understanding, not necessarily...
There must have been another inspection in June this year. The results are not out?
So
annual inspection.
So annual inspection took place in the second quarter. Yes, we don't have the results of that exercise by the regulator with us till now.
Okay. The other letter that Mint is referring to is that they had asked the board to claw back some of the profits, some of the benefits given to Mr. Rana Kapoor for the year 2015-16 because of the divergences, I would assume. And they are cut up that when the extension was requested by the board, there was no reference to the fact that RBI had asked for the clawback. I mean, is that what led to the Mr. Kapoor not getting an extension, and why was the clawback not done?
No, so see, the clawback, let's say if you refer to Basel III guidelines, the context of clawback relates to bonuses and management compensation. So the philosophy with Basel III is that we should not encourage management to take risks, take home bonuses, and then go to other jobs and not worry about consequences. So the first thing which Basel III and including RBI introduced, that any significant management compensation like bonuses have to be deferred. They cannot be paid in one tranche. So the deferment of bonuses has the board or the management then has the ability to claw back those bonuses in case the risks pan out to be, let's say, unsatisfactorily. Our situation is a little bit not very clearly in that direction because our risks have not panned out to be in a direction which is clearly adverse. Right, our NPA ratios are still top 3, top 4 in the country. The bank's performance on return ratios has also been reasonably, I would say, acceptable to most, right? And that was reflecting in our stock price as well. So bonus is something which, in our judgment, would have related to, or in the board's judgment in this case, would have related to outcomes, and therefore the debate whether the board should have done in terms of reflect, and how do you reflect this philosophy in your actions. I think that is what has been, I would say, a difference of opinion. And And we know who wins in that difference of opinion, right? So once, if you know that the regulator is expecting that this has to be done, it will be done.
Okay, since we are on the subject of NPAs, I mean, you know, in the quarter gone by as well, there was some deterioration that we saw quarter on quarter. You did explain that, saying that there was one big 600 crore account because of which the slippages went up quite a bit.
True.
But how are the next few quarters looking? Do you see further pressure?
So I think also asset quality is a subject which will always leave some pressure behind. I think we have discussed on our last meeting in the studio on IL&FS particularly. So if I leave IL&FS aside, because that's been put into some suspended animation, given that it is subject to now court directions, the rest of the outcomes look, in my opinion, I would hazard a guess that they should be better than first half, as far as the second half asset quality outcomes are concerned. Including, let's say, when we get the RBI report, we do not expect the RBI report to have any significant flow through into either NPAs or credit cost. So, however, the caveat that I was making continues to be IL&FS, because we still don't know what the court directions will be finally on the matter. At the moment, IL&FS is under the court's sort of administration process.
Okay, Rajat, when do we hear of the chairman's announcement?
So the job is being, let's say, carried out. I think we will have to allow that process to be complete, including, for example, any appointment. Go back to our very first discussion on this chat. The appointment of directors, we have to go through the process of taking hold of what all their interests are, what have their past
all
assignments,
the due diligence.
Have there been any pecuniary relationships directly or indirectly with the bank, so that the independence has to be ensured, right? So if there was a person, let's say, who was employed in a company which was a client of the bank, and if he was in a senior decision-making position, that is a conflict of interest. We have to look at those, examine all of them. So it is not something we can simply conclude overnight. So this process has to be followed. I'm of the opinion, and what I'm also hearing and observing. I'm not doing the appointment process, so please don't misunderstand me. But we should be looking at an eminent person who is independent in all rights.
I'm sorry, I have to ask you this. Yesterday, Nandan Nilekani was on everyone's lips. So, can you confirm or deny?
No, I will not be in a position to comment.
Okay. All right, fair enough. It's the board's decision. We take it. Rajat, thank you very much for dropping in and patiently answering all the questions. I'm sure investors out there will be happy to hear your side of the story and all the facts with respect to deposits, etc.